Hello. I'm going to go over a practical application of using the JSDesktop. Today's September 3rd, 2015. I'm going to take a look at the S&P. JS Services defines the macro structure of the market, and this represents the strategy foundation for the trade period. Trading is like a chess game where your trading tactics are the pieces and the strategy foundation is the board. So really understanding that foundation allows you to tweak your tactics to optimize and align them with what the market state is. JS Services defines the market state for the session. The reason is that this is what the funds focus on. The large funds dominate the market, and they're concerned about what happens today in today's close. Funds are performance driven, with a short-term outlook of 3 to 6 months. What they care about is today's close, and how that performance compares to last week's, last month's, last quarter, last year's close. What the funds care about is the market going to hold structure of the market state, or is the market going to transition into a new state? The funds identify a structure bias, and what JS Services calls a reversal level. This is the over-under number for the trade period, where sentiment shifts from positive to negative. It is the inflection point that defines the structure bias of the market state. So in the S&P today, we identified this level as 1967. So the market state was in a bear trend, and a bear trend is defined as a market that's making lower move lows, lower move highs. And this structure bias identifies the peak of that lower move high. So as long as the market is trading below 1967, this bear trend state is true. So because if the market breaks structure and goes above this price point, it's no longer in a bear trend. It's a tell that the market's in transition, and we don't want to hope that it's going to stay like a bear trend, because it's not. It's no longer true. A bear trend is defined by a market that makes lower move highs. If we make a higher move high, it'll negate that statement. So we're always looking for the market to perform like a textbook. In addition, on the structure tab, we have our market color profile. And in a trending market, a good indicator is the ADX. The ADX is a trending ability indicator. It shows if the market has trending ability or not. And purple means it does. So when we're in a bear trend market with good trending ability, that's a good momentum market state. A big part of understanding the macro structure of the market is to improve your awareness. And as traders, that is your awareness, and your ability to make intuitive decisions is your edge over the algos. To make trading decisions without thinking. And to do that, you need good knowledge. If you have an opinion or a bias or some conjecture that you're not sure about, you have that doubt. It's harder to get in the zone because you don't have those facts. To really make good decisions, you need good facts, and that's what JS Services provides, is these true technical facts. And so, fact is, what do we know so far? That the fact is the S&P is in a bear trend. Fact is the structure bias is above the market. Fact is we have a market that's got good trending ability. The next thing to look at is our strategies. So we have a market that's in a bear trend with sentiment above the market. When the market's in this position, sentiment is in line with the market state. Sentiment's above, negative sentiment, negative trend. The optimal thing to do is to sell fade against our R-level resistance, that's sentiment bias, and we can also accept a reversal strategy. And a reversal strategy is when the market takes out that inflection point, squeezes us a little bit, and then comes back down through it. So in this market state, because it's this state, this structure, we want to fade momentum into it, and if we get a head fake, we want to sell it again or leverage up. If the market starts to transition, so every market state, we know that markets are constantly transitioning from one state to the next. We don't know when that's going to happen, but the market tells us when it's going to happen, when it breaks structure. So if this market starts to break structure above 1967 today in the S&P, that's going to be a tell that the bear trend is over and it's transitioning maybe into neutral, bear trend correction, maybe even a positive transition. We're not sure, but we know that we shouldn't anticipate it to perform like a bear trend. And another hedge strategy would be if we fail below 1922, which is our downside pivot, and we can't sustain that break, we could get a buy DP reversal, and that would be another tell that we might be in for this kind of corrective rally. So this is how we want to start every day, with a fact focus. Fact is, market S&Ps are in a bear trend. Fact is, structure bias is above the market with negative sentiment. Fact is, the optimal strategy is to fade momentum into that inflection point, and also if the market's going to break structure and transition, we may have these strategy themes to play out. So now let's take a look at the intraday action. And so we come in, it's pre-market, 7 a.m. Central Standard Time. Here's our R level, directional, overnight action. The market's been kind of rotating, and we know that this is our sell area, and we're just going to kind of walk through the session here a little bit. And so right off the figure this morning, we had a challenge to this resistance, and the market rejected. One thing that's interesting and a key component of the price map is the structure. And so what the structure does, it identifies the segment moves the market's trading in. So the market likes to trade in what we call an average price map distance, or APMD, and that, literally this distance here is a average price map distance. So you'll see the markets trading within full APMDs and half APMDs. So this would be considered a half APMD move. And so this is something you want to use for your targets. When you're short-term trading opportunities, you're always getting into a situation you're ideally looking for at least one APMD, and actually in this situation, since it's an R level, we're looking for even more than that. We're looking for at least 2, if not 3, to see this market make a play for the downside pivot, if not lower. So having that trade vision. So as the market comes into the regular open, we get another challenge to this resistance, and here, what is the market state? We're in a bear trend. We're short the market in this area, and now we're getting squeezed. If you have a hard stop and you're stopped out, one thing that we know about the price map is that 1978.25 is the confirmation point for a upside breakout. So until this 1978.25 level is taken out, this is just some noise, and we have to be concerned about that. Depending on your risk tolerances, you might be getting stopped out, but you're not wrong until the market takes you out here. Definitely don't need to risk that much. You could be out and get back in, but just again, we're focusing on the bigger theme. What's playing out, and at the moment we're not sure. Are we breaking out into a hedge theme, or are we in a bear trend? And we're just setting up this reversal. And so as the market breaks back down here and we break structure, so we had this positive structure, we're not sure this could ramp up into be a big breakout, and here at this bar we get a break in the structure here, and at this point it confirms it. So at this point we have clarity. We have clarity that that this strategy theme is playing out. This is where you really want to start to leverage up, because you have good facts. You know that at the minimum I'm looking at a play for the half an APMD, full APMD, 2 APMDs. If I'm getting short in this area, I may have just sold the top of the next leg lower, and that's where having this trade vision and having this macro strategy foundation really pays out, and you anticipate it to trade like a textbook. You're not thinking, oh, the market is overdone. You're thinking, this market's in a bear trend, and I'm looking to sell rallies and ride negative momentum. So the optimal strategy theme is in play, which was defined by the macro structure. So now we're in the middle of this position management, and this is where it becomes more difficult. Understanding that the R level is going to be the best place for a risk-defined opportunity. We've got that. Now we're in a trade, and we want to work that opportunity, targeting at least the directional area or the downside pivot at 1922. And so now I want to take a look at inside the order book, and we work with BookMap for that. And I want to kind of show you an interesting opportunity that happened today with the order book. And what you're looking at with this heat map, whiter the lines, the more liquidity there is there, and this represents resting paper, and these different shades are showing different liquidity coming in and out of the market. You can actually see algos working with this technology. So here you have this low and that low, and right now we're here. So let me blow this up a little bit more. It's a little easier to see. So we're talking about these two lows here. So we're talking about. So as we move forward, here's how the map can help identifying this opportunity. The market kind of was coming back up here, and we can see that how the order book shifted, and we had this resting paper to identify where we can anticipate this rally to go to. And so this resting paper is right at the top of the variance of our CR plus, so anticipating that we've got some resting paper here to sell against at 1955, and so the market rejects off that area, and it's making a play for the directional. And as we're coming into the directional, here we've got resting paper that's been there for a while, and then it starts to really build up, and so it's building up in front of the directional. And so it gave us, here's how the BookMap identified that buyers were stacking up in front of the figure and producing this rally. Now, again, always going back to fact focus, we're in a bear trend. We're in this negative strategy theme from the R level strategy. That strategy is still in play, and now we're getting a rally back up to this 1954 level. And so here, as we kind of go through the BookMap, it's stabilizing off this support, and we're coming back in here, and we see we've got resting paper here at that same order guys still here at 1955, and now we've got some resting paper above the market at 5650. And we can also, looking at the negative structure, bear trends perform like a bear trend. Lower move highs, lower move lows. So this structure high point here is key for this intraday bear trend to remain true. And so this is 1957.75, so a little above the market. But here's what I want to show you guys that's really interesting with the BookMap. So you're coming up here, and you have this resting paper, so maybe you're putting some out here. You're not stepping out because you've got paper to go into. It does give us a reaction, decent one, as we come into this area, and we get this little bit of a couple handle reaction, so you think we have some money made, and now we're getting squeezed a little bit on these sales that we added onto our short position. But we know that this is our structure break point. It's real clear. Now again, fact focus, as long as it's holding negative structure, we shouldn't be thinking, oh no, it's turning. No, this is our structure break point for this negative momentum that we've got going on, and we have to feel comfortable with it. And then what happens is we're getting squeezed, we start to see the book start to build up, and then it really gets heavy here. And so this has to give us confidence, and it gets even heavier. And so now we're getting more confidence that this thing is negative, and we want to get back on the short side. So if we did get stopped out or got nervous, at this point when we see all these sellers lining up, the book's getting really heavy to the upside, it's giving us confidence. Again, fact focus, we're a bear trend, sentiments above the market, we're in a negative strategy theme that's playing out, and we've got a structure point here, and now the book's building up. This is giving us confidence to jump on this negative momentum. And then the market, price qualifies back underneath the 1954 level and gives us another opportunity to enter in. We know where the resting paper is. We've got that confidence. We're working this momentum, and we're anticipating this market to follow through, and it does. It continue to work that. That's your story. You're sticking to it. You're a bear trend, and we're going to focus on that. And the market attains, our full APMD target down to the directional. And then, we kind of coming into the close, where the market gave you another rejection off that 54 level, but sticking with that theme. As long as the market is performing to expectation, to the market state, as we identify that we're in this optimal strategy theme, you should anticipate it's going to play out textbook. And this market didn't follow through all the way. We'll see what happens overnight. We're in this momentum. We should anticipate a play for 1922. It didn't play out all the way, but the bear trend performed like a bear trend. It performed textbook. It had negative structure, and we saw in the inside the order book how that can help us, really work those trends. But you don't want to get turned around. You don't want to think. You want to have a fact focus. What's the state? Where's the sentiment structure of that state? What strategy theme is playing out? And if there's a theme that's playing out, sticking with that theme, and then diving into the order book if you have that technology to really help you work those positions. As always, any questions, feel free to email us at info@jsservices.com. Thank you.